This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome back to the Research Talks here from Stockbox with Alan Green. So, Alan, how are you on this weekend? It's I think you were telling me earlier you've got a lovely, I think you said balmy day down south. It's not so like that here. It's a bit grey. It's looking very grey.
Yeah, we've got some fantastic weather on the south coast today. Just hope it's going to last over the weekend, but the weather forecast indicates otherwise. But it does mean that hopefully, with a quiet day in prospect, we can get out and do some stuff, which would be nice. But it's lovely, lovely at the moment.
Today we're going to talk about three stocks. We're going to talk about GreenX, we're going to talk about Kazera Global, and we're going to talk about Georgina Energy. So let's start with GreenX, Alan, and bring us up to speed on everything that's going on with GreenX.
Okay, it's been a very eventful, seismic couple of weeks really for GreenX Metals. Now, just a bit of history. GreenX Metals were formerly Prairie Mining, and the name changed several years ago. And Prairie Mining was the historical owner of two coal mines in Poland. And basically, the Polish government took those mines back and withdrew all the rights. And so the company went into, I guess you could call it hibernation for a while, and then hired a legal company, LCM, to basically sue the Polish government through what's called the BIT Treaty, or the Bilateral Investment Treaty, and also the Energy Charter Treaty. And as you can imagine, court cases of this nature go on for years and years and years, and there are huge legal costs incurred. Nonetheless, the legal company LCM provided a $16 million fund to GreenX Metals to prosecute the case, and that has continued. I'm going to come to the outcome of that in a second. But during that time, the company acquired a series of projects, two projects in Greenland. Firstly, the Arctic Rift copper project in northern Greenland, and it's a joint venture, or an exploration joint venture, between GreenX Metals and Greenfields, which is a private company. And GreenX can earn up to 80% in the Arctic Rift copper project, which is targeting large-scale copper in multiple settings across a 5,700 square kilometer exploration license in the northeast. Now, a couple of years ago, the company visited that site. They bought a ship through the fjord at the top of the area, and they landed these incredible vehicles called Sherp vehicles. And there is some social media posts. In fact, if you look at the Brand UK tweets on behalf of GreenX, you'll see some of the camps on the site and some of the historical shots of the Sherp vehicles. But these are all-terrain vehicles, and the team are driving across this area and literally chipping away at rocks and bringing up what was referred to as smelter-ready copper. So it was quite a find. So the company's in the process of further analysis. Logistically, of course, it's challenging to extract the copper, bring it down against the market, all the rest of it. But that, of course, is being worked on. But a lot of that outcome was largely based on the outcome, of course, of the court case. So secondly, the company owns the Eleanor North Gold Project, and it's entered a revised agreement in July to acquire 100% of the Eleanor North Project in eastern Greenland, which is two exploration licenses covering 1,200 square kilometers, and they're approximately 1,000 kilometers south of Arctic Rift project. But again, the company's undertaken production of a geological map based on helicopter photography in 2023, and it's highly prospective for gold. Most recently, the company announced during the summer that it had entered into an agreement for the for the Tannenberg Copper Project, which is private. It's the company GreenX has got an opportunity to own a 90% interest in Group 11 Exploration GmbH, a private German company, which is the owner of the Tannenberg Project, which is a highly prospective sediment-hosted copper deposit. And these have been historically mined in Germany. They're still mined in Poland, and the exploration license there is some 272 square kilometers in the state of Hesse in central Germany. And these also encompass historical Richtelsdorf copper and silver mines. So within the asset portfolio, GreenX has three highly prospective assets. Seismic. On October the 8th, the company was finally awarded $490 million under the BIT Treaty, and the 490 million Australian dollars equates to approximately 252 million pounds sterling. And also the award included interest compounded at the standard overnight bank rate of plus 1% compounded annually until final payment is made. Now, this is, of course, less the legal fees to LCM, and LCM are entitled with a $16 million fund. They are entitled to receive a fee from that of 5 times the outstanding funding. So that equates, by my reckoning, to about 80 million. But that still leaves the company with a substantial chunk of money to develop and build on the existing projects. Now, of course, the share price of GRX did spike up on the day, but it's really, I think, considering that the fact that that settlement has been made and all of these options are now opening up to the company. It's currently trading at 38p. I think maybe a lot of people were holding on for the judgment and have sold out, but with this funding shortly to be in place, the company's in a great position to advance these assets. And I think it's got a market capitalization currently of 223 million Australian dollars, which is about 120 million sterling. But considering there's 200 million plus coming into the pot, I think a company with 200 million cash should be valued at least that. So it's a no-brainer to me. I think that valuation gap will be addressed very shortly indeed.
So there's 200 million coming into the company in cash?
Yep.
And the 80 million you mentioned, what was that in relation to?
Okay, so there are many companies that provide litigation funding for companies to hire lawyers and teams of lawyers to prosecute large cases, which of course take a tremendous amount of time and they cost millions of dollars. But it's a profitable business, and LCM, the company that provided the fund to prosecute the case against the Polish government, provided GreenX Metals with a $16 million fund. Once the settlement is received, LCM are entitled to 5 times that outstanding funding, which equates to about 80 million, give or take. Okay. I mean, those numbers might not be exact, but they're certainly within that.
Right, so there's 80 million out of the 200 that's owed out.
Yeah, that's it.
Right.
Yeah.
Wow, that's a lot of money to spend, isn't it?
No, 80, that's $80 million out of the 490 million Australian dollars. So it's still $410 million, which is about,
right.
Yeah, which is about 200, just over 200 million, I think. So that net figure will be going into the company, and I mean, by any standards, that is a lot of money. So it's and the company's got a market capitalization less than that cash that's going to be coming in. So it's a bit of a no-brainer, really. But there we go.
So it's discounted just on the cash value, right? Okay.
Yeah. I mean, okay. So if the Polish government stall on payment, there are all these variables, but the judgment has been made, and these sort of cases have been prosecuted against other countries too. There was I forget the company, but there was a case prosecuted successfully in Italy recently. I think it was an oil and gas issue. So these cases are successful. So and again, it's a question of how quickly the government sort of pays out on that ruling. So So it won't happen overnight, but all the time the government does make the payment, that interest is ticking up. So really, it's in the interest of the government to get it paid up and sorted as soon as possible. But that's that's a huge result for Ben Stojkovic and the team at GreenX Metals.
Indeed, indeed. Okay, well, thank you, Alan, for bringing us up to speed on that. I mean, they have plans, presumably, to deploy that cash, or they're not getting too far ahead of themselves at the moment.
Well, I think with the three projects, you've got Arctic Rift Copper Project, you've got the Eleanor North Gold Project, and I mean both those projects have huge potential, and also of course the Tannenberg Copper Project in Germany, which, as I say, encompasses the historical Rittelsdorf silver mine. So really, once the funding comes in, they can crack on and get on with those and possibly get engaged with other assets too. But it's a huge opportunity, and it's a transformative phase for the company. But it's as I say, the share price popped up on the day, but it's now kind of drifted back down again, which I find astonishing. But anyway, there we go.
There we go, indeed. Well, let's move on and talk about Kazera Global then, Alan, of course, who will also be getting cash in the coffers, I think, pretty much immediately, but certainly as they head into Q1.
Well, they certainly will. This is a really interesting company, and I think it's the assets just prove work smarter, not harder is the mantra that companies should be looking for now. And we're seeing this with other companies that are in the resource space, looking at opportunities which generate cash, or that they've got an opportunity to generate near-term cash, or there's a means by which the project can yield cash flow within a very short time frame. And that's what Kazera have certainly got within their asset portfolio. So the company, KZG, is the EPIC code, AIM listed. The shares are traded as high as 1.5p on the year, as low as 0.31p. Currently trading 1.18 pence, giving the company a market cap of 11.3 million. So the company describes itself as a commodity diverse investment group focusing on identifying and investing in opportunities that offer value within a defined time frame, and also offer a predetermined path to exit and value realization, which is what companies in the space have to do now. So it owns 100% of the Deep Blue Minerals project, which is in Alexander Bay in South Africa. And Alexander Bay is a diamond project with an inferred resource there of 208,000 carats. Now, when I say it's 100% owned, 74% is owned by Kazera, and 26% is owned by the Black Empowerment Partners, also engaged with the project there. The company also owns 70% of the heavy mineral sands project at Whalehead Minerals, or the Walviscott Heavy Mineral Sands Project in South Africa. Now, the run of mine mineral opportunity there is garnet, which of course is an industrial, has a multitude of industrial applications, and ilmenite, which of course has applications and can be it contains titanium dioxide and other elements. The garnet is estimated to be some 30%, and the ilmenite some 27.5%. With a rating of with the project overall as it stands of 1.5 million tons at 49.9% mineralization, which of course is hugely important. But the unique element for this project, this heavy sands project, is that as it's on the beach, it's actually replenished by wave action. Now, on behalf of Kazera Global, a company called Optimo was commissioned to publish a research report, which I had a good read of, and it just makes a really interesting point on the development of the business. Cash flow and profits are about to be generated by the diamond and the heavy mineral sands projects that shortly to go into production. And it says the heavy mineral sands replenishment by wave action is the real potential company maker. And the existing project, the Walviscott project, is only 5 hectares. Um, just down the coast, there's a project called the Tormin project, and that's been going for a number of years. It's already mined 5 times its indicated mineral resource estimate of 2.8 million tons, and that's because it's constantly replenished by wave action. So on the back of that, Kazera has applied for the rights to mine on an adjacent beach, which is 34 times the size of Walviscopp's, called Perdevli, and that's expected to be awarded in early 2025. And a few days ago, the company announced that it had received a request to provide an environmental guarantee for the work it wished to undertake on the beach, and obviously that's a big step forward to receiving the permit. There's another element to Kazera as well. It had a tantalum project, African tantalum, or AFTAN as it's known by its abbreviated name. Now it sold this business to a Chinese company, Hebi Xinjiang, and it's not been paid by the company, so it's instituted legal proceedings against the purchaser, and in regard to the sales transaction, Kazera has the right to cancel the transaction and retain amounts that were paid to date by HX. It's owed $9.5 million by HX, and has commenced arbitration. So obviously the outcome of that remains to be seen. But with all of these elements combined, and the potential company maker, which is the heavy mineral sands projects, that's of course Walviscop and the new Perdevli project. Optimo has a target price of 5.14p, and this is based largely on the fact that it expects the company to start generating cash and become profitable early next year. So that's hugely exciting and potentially transformative. But that's a big jump from the current 1.18p. So, if everything continues to plan, and we've had this request for the environmental guarantee, which is a big step down the road towards receiving the permit. Once that happens, then yeah, I think the team have a really exciting project on their hands. Just a note on the board, of course, Dennis Edmonds, who's he's in fact, I did meet Dennis at an investment show a few years ago, and I was chatting to him. He lives in Sussex, but of course his connection there is through Tectonic Gold, which were also part owner of the Afghan project. Gerald Kisby Green is also non-exec chairman of the group, and then you've got Jeff Irie and Peter Wilson as non-exec directors, all with vast amounts of experience in the mining industry. But I think Kazera is at a potential value inflection point, and certainly with that target from Optimo, I think it's got a very interesting couple of months in prospect.
Yes, indeed, Alan. Well, thank you for that. Thank you for giving us that investment case. I do agree. I spoke to Dennis Edmonds just this week, and yeah, he's very happy that finally this heavy mineral sands project is indeed coming to fruition. He's been sort of saying it for a long time. You can see he's seen the opportunity there for a long time. But with various delays, of course, that inevitably come in, we're finally starting to get to that point where, yeah, it's going to start generating revenue. So, looking forward to seeing how that goes. But I mean, yeah, it's all go. I think, particularly with the new Perdevli area as well being much bigger than what they've got already.
Yep.
So, yeah, cash generative, profitable. That's what he said. Dennis seems very confident. I mean, as you say, what did you say at the start? The simplest operations are often the best, something like that.
Yeah.
Yeah.
You've got a beach, and there are some there's a presentation on the website that actually shows some of these pictures, and and you can see the mineral sands on the beach, and of course you could basically go with your bucket and spade and just dig them out, and you probably have some valuable stuff in your bucket, in your bucket. But with an industrial scale processing plant to process that, course, the waves are coming in, replenishing it. The seas, the sands are constantly being replaced. And I think the Tormin project down the coast really is a very good example of just how good these projects can be. Extremely simple, but they've been mining, I think, for 7 years, and the company that owns Tormin has already mined 5 times the indicated mineral resource estimate of 2.8 million tons. So that's well over 10 million tons already mined and taken to market, and that's all because of wave action. So what a
Yeah.
simple model.
Indeed, indeed. Well, thank you for that, Alan. So let's finish off now and talk about Georgina Energy and, of course, helium and the increase of the reserves there as they're going to be entering that well before Christmas.
Indeed. I mean, Georgina, what a couple of years it's been, because of course I did interview Tony some time ago, and Tony Hamilton, and they've had this 5-year plan to bring the company to market, and it's literally now happened. So of course, Georgina Energy are the owners well, firstly, they own a 100% working interest in the Hussar project in Australia, which was initially prospective host to recover resources of 155 billion cubic feet of helium, 173 billion cubic feet of hydrogen, and basically 2.97 trillion cubic feet of hydrocarbons or natural gas. That was the initial premise. It also owns the rights to 75% working interest, rising to 90% interest of the Mount Winter prospect, which of course was a prospect owned previously by Moslem Oil and Gas. And again, prospective resources there of 148 billion cubic feet of helium, 135 billion cubic feet of hydrogen, and 122 trillion cubic feet of hydrocarbons, natural gas. So the combined was initially 303 billion cubic feet of helium, 353 billion cubic feet of hydrogen, and 3.25 trillion cubic feet, 2.97 trillion cubic feet of natural gas. The company provided an operational update at the start of October, detailing updates on drilling permits, also the appointment of Westmarket Oil and Gas as its nominated operator for the Hussar project. It had also initiated a data sharing agreement, and stated it would be on site in December to conduct a site inspection of the Hussar prospect. Also, the company has received a seismic report on the Hussar as well. Regarding Mount Winter, it's met with landowners there. The company's met with landowners and expects confirmation of an outcome regarding an application, a permanent application there. It's also identified potential additional targets across both prospects, and has appointed a scoping study, a consultant to complete the work. And of course, we're going to hear about those in the coming weeks and months. But significantly, the big step forward, I think, in October was the company announced yesterday a resource upgrade for Hussar, and following the work that's been undertaken, the helium estimate is now upgraded from 155 to 196 billion cubic feet. Hydrogen was 173, now 218 billion cubic feet, and hydrocarbons at 1.75 trillion, now just over 2 trillion cubic feet, which represents a 20% increase in the estimated or the mineral resource estimate for Hussar, or the resource estimate for gas containment at Hussar. And as Tony Hamilton said in the announcement, this is the realization of a 5-year journey for the Georgina Energy team. And of course, that now brings the total gas resources owned by the company. It increases the helium total gas resources up from 303 billion cubic feet to 344 billion cubic feet. The hydrogen number of 308 billion cubic feet increases to 353 billion cubic feet, and the natural gas or hydrocarbons increases from 2.97 trillion cubic feet to 3.25 trillion cubic feet. So, of course, we've seen a lot of news this year from companies in helium. Of course, Helix Exploration had an incredible year with the IPO, and Bo Sears, the chief executive, of course, has written a book on helium called Helium, the Disappearing Element. There is a worldwide shortage of helium, and there's huge demand for projects coming online. Of course, more recently we've had M3 helium, or as it now is Mendel helium, which have evolved from Voyager Life, with the projects in Canvas, which seem to be moving forward at an incredible rate. And Georgina Energy is another company with some really exciting gas prospects that are moving forward very quickly. So the company, of course, reversed into minerals and metals in July, and following a fundraiser of 5 million, issued new shares at 12.5p. Shares have drifted back a bit since that point, but they're not far off. They're at 10.6p. So there's an opportunity to get into this company now, which is, I would say, very much a pivotal point in its evolution for less than that issue of new shares. So a great opportunity, and I think provided Tony and the team keep this on track, which I'm sure they will, then I think there's plenty of upside to come before the end of the year, and certainly during 2025.
Yes, indeed. Well, as I said at the start, getting into that re-entry, as they're calling it, re-entry well before Christmas. So that's something certainly to shareholders can look forward to, isn't it, before the end of the year there, to get into that re-entry and really see what's there. I think the main objective of that is to really show that the helium presence is there, and then really after those 3 months, you want to sort of 3 months following that, I should say, you want to get looking at the flow rates, understanding the composition of the gases there, and then effectively getting offtake agreements in place. So I think there's a lot to come in the next, let's say, 6 months? Yeah, Q4. Well, Q4 is a big one as we go into that re-entry, and then Q1, testing those flow rates. So, yeah, that would time quite nicely, wouldn't it, over the Christmas Santa rally and into the new year before we hit the sort of the May time next year.
Well, I think it will, and there's a very good presentation from Georgina that's on the website. The most recent presentation, which provides a very good overview of both Meltwinter and Kazera, and also historically there's been a lot of work in the areas previously, so it's well proven previously from drilling work, and there is thought to be significant potential to increase this gas estimate still further still, and I'm sure once the team are on the ground there, and of course the drilling, they drill those new recoverable wells, and of course once you're down there with the new equipment, then it could be very exciting indeed. There could be a whole lot more down there. Much as we've seen with Mendel helium, they're drilling there, or they have a well in place, and all of a sudden they test the well, and the flow rates are well ahead of commercial expectations, or what would be considered to be a good commercial level. So it's hugely exciting. So it's they're at a very exciting juncture in their evolution as a company, and providing, I think, below that initial IPO or the initial RTO price of 12.5p, I think they provide really good value.
Well, thank you very much, Alan, for your time as always. Do have a pleasant weekend, and we'll catch up next week.
Thanks, Mark. You too.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.